This conference will now be recorded.
Good morning, folks. This is Fadi Hamzi. I'm with Hamzi Analytics. Today is June 23rd, Wednesday, uh, 2021. Welcome. Uh, Thanks again. I'd like to acknowledge Tony. He made a suggestion. It was absolutely right that we have not done this in a while. And obviously, I'm trying to get back on the horse. There's been a lot going on. And so, my apologies. With that said, let's get to the program here. In terms of our morning brief, we will get back on a horse. We also, because this is supplements the PMT charts we have, chart review that we have. In terms of housekeeping and stuff, I'll be very, very quick. V3 is back online. They were doing some work on that, but it's back online now. We have not finished the desktop. There's a couple of issues there, but obviously we got through a bunch of stuff here. And now we're getting to the next phase where we get the chat rooms back. And of course, we're adding a very, very tremendous option strategist with a great history of understanding of TradeStation and options and trading and teaching. He's very, very good at that. And of course, he's an avid option trader himself. Mike Burke. It should be, it's not official yet, but you're getting a little preview. But he's been a good friend for about 22 years, something like that. Very, very systematic guy. Runs a lot of systems. Very in tune with the, dealing with retail. What our issue before was that we had an institutional guy, and then options are a different animal when you go to institutional level. You have a lot of firepower. Average person doesn't. You can do short calls. Naked trades. Can't do that with the retail, and so on and so forth. All right. That's in the news. What else? No time off for me. Admiral is good. He's had some issues. Admiral Tico, he's had some issues. Aside from that, I'm trying to get back on the saddle. So I apologize for getting a little bit behind, but it's been, if you hear everything I've gone through, you understand what has been going on. You know me, I never quit. I never walk away from a problem. So you can imagine what I've been trying to muster together here and move forward. Having said that, let's go to the meeting. Morning brief is here. We're glad. Thanks, Tony. Here's the first thing we want to talk about is econ calendar. Again, one of the things I want to also acknowledge with Tony is that I was just telling him a little bit earlier before we set up the room and fired it up. We have he has encouraged us to give us some suggestions. It's been very helpful. It's good to hear from a user base. And of course, one more item: Skype for Business is going to be terminated by end of July. We're on our way to adapt to go to Teams, or our fallback position is go to meeting / go to webinar. So the services will continue, but we just want to get it right and do the integration right. As you know, we hired a new programmer to help us on the Microsoft cloud for our desktop. So having said that, one of the things I was doing is our checklist in the morning. Well, that has become a little bit longer, and I keep a note of it, but it's 2 page long now. Not that I'm out there to share it with you, but it's helped me to do my homework in the morning, be more consistent, and less surprises. And you can see in OTF trading, you see the results. Things are fairly orderly now, and I've found additional angles how to do this properly. So a part of it is get your rest, do your homework, watch your charts, and watch what's going on. Two things we look at, and according to that checklist too. One is econ calendar. One is settings of the market conditions. So we'll go through that with you right now. Okay, today's the Wednesday, 23rd. As you know, big thing today, every week is EIA, the oil stuff. Now, because it's the fourth week of the month, you're gonna have PMI, and you're gonna have new home sales post cash open. So let's take a look at both. These are the PMIs should tell us a little bit about you know, is there inflation out there? What do they feel out there in terms of service sector companies and manufacturing? What the purchasing managers are reporting. Let me go a little bit bigger. Okay, so 68 is what they're looking for. Anything above 50, as you know, is positive. That's a composite. Yeah, both manufacturing and service. Service is coming back. Good, good. Okay. So this comes out at 9:45. I think the bigger issue is going to be new home sales for me. I do believe two things very simple. It's auto and real estate. Homes and auto is what drives our economy. So, what is it going on here? Or nothing, guys. Sorry, I got sidetracked. Annual rate 863. That was prior consensus 881. Another big range. I see. Okay, we'll see how things go. As you know, this is the May data, obviously, because we're reporting in June. And as you know, in April we drop fast. We drop sharply. So I think part of it was also cost of materials have gone through the roof. Thus the shock of inflation, even for most learned people like the Fed governors and so forth. Now there are a bunch of hosts of these guys are chatting today. Bowman speaks. She's a Fed governor. She doesn't run FRB, Federal Reserve Bank, but she sits on the board of governors. Bostic is from Atlanta. That's right. And then Rosengren, which is from Boston. If I'm right, yeah. Rosengren's from Eric is from Boston. Tomorrow it's going to be another series of items that are crucial. Obviously, jobless claims, but you have durable goods and GDP and in trade. Why? So fourth week of the month, you have that. Remember, first of the month you have employment. Second is CPI, PPI. Third is expiration. Fourth is GDP, trade, durable goods, and somewhere in here should be also LEI, leading indicators. Where the hell is that? I didn't see it. Now, remember, also the calendar is falling back where it's supposed to be because of COVID. Because of a COVID issue that cut back on teams that were working and things, and so the schedule was very Humpty Dumpty. Now it's coming back into some normalcy. Williams speaks again. You got to watch this guy. This is head of the New York Fed, probably second most powerful man in the Fed our hierarchy. Kaplan is from Dallas. Watch this guy now. Bullard tomorrow at 1. He spooked the market last week. Remember Friday? Yeah. So keep an eye. I think there's going to be a lot of eyes on Bullard. None of my favorites. He's very not one of my favorites. He's a very dovish guy, but we've had a couple of exchanges out of when he would come to speak in our club in Chicago. Meister is from, or Mester, I should say, Cleveland. Yeah, Cleveland. Again, Boston, and then New York. Interesting characters. I do want to look at consensus of. I want to look at the personal income, but I don't think this should be green. I think that should be red. The consumer sentiment for tomorrow. Let's see what GDP's got with durable goods. 1 second. As you know, we try to do this every other day, but we want to get it to at least 2 or 3 times, at least twice a week now. Good wrap up. 0.2 -1.3. Where's that coffee? Okay. 2 consensus. Okay, that's a big range there, Jack. Hey, Jack, that's a big range. X transportation was good. Okay. If anything, I want to look at this number. Capital goods. Yeah, it's long term, more long term plan. You got to see the big players making a commitment. Okay, in capex. You can feed people so much, but on one GE engine, that's a lot of restaurants. Yes, exactly. Airbus now is reporting that single engine aircraft, single engine for twin engine aircraft is 32 million euros each. Yeah, I remember days when the airliner was even 30 mil. So Jet, yeah, okay. Jobless claims, another one we want to watch. Okay, 412,380. Okay, we're going to expecting it down to get. Remember where the uptick last week, yeah. So this is the range. They're definitely thinking that we're going to be below prior. Good, that's good news. All right, and then the big granddaddy of all is GDP. That's what this one has. By the way, if you guys have any questions, there's a chat box so you can post them there for me. Okay. GDP 6.6. Okay, 6.4 up to 6.6. Okay. That's huge. Yeah, this is pent up demand. All right. All right. Let's go to charts quickly. Okay, what time is it? 8:48. Where's my charts, Jack? Let's go here. All right. Timer charts. Okay. Okay. Nasdaq finally caught up, making new highs. We had a pretty decent short there, and we didn't cover. I still think we were heading lower, but what do I know, right? So we're back. I think we. Don't know if I had it. We had a all-time close there. Hold on. No, not close, but touch it. 42.57. Yeah. No, I think we did not touch it. Two handles below, we stopped. Okay, gotcha. Okay, came down. Not a big bunch. Not a big. I'm saying jump on the. I mean, not a big drop, and thus not a on the McDonald's, and thus not a uh, keypad. We could launchpad mode. Did not go to launchpad mode because number was not deep enough, like here. Okay, and we're still struggling there. I don't know what we're doing overnight. Let me take a quick look here. We're up 4 and 11. Okay, all right, we'll get to that too. Okay. Obviously we had a decent ratio there in terms of down volume to up volume. What was that registry? Hold on. Yeah. And again, that's another proof in my mind, okay, that we 606, okay, that was 6-to-1 ratio. That's to me again, that's not a flush. This one, last Friday was not a flush. We need a flush. We got to clear all the bow longs. We're not there yet. Okay. And we even looked at yesterday. If you look at the birth trust, it's not there either. So now, remember, we go back now. Let me go a couple of charts forward. Okay, let's go to D trender. The trender. Okay, transposition is telling you that right there. Telling you that right there. No new high and ticking lower. So if he takes this low out, yeah, we're going lower. We're going lower. Never ever space has gone up with NDX or with trans retreating. Hasn't happened. So especially now, especially even now, because we have so much deliveries that we have to provide. 1 second. 1 sec. For good. All right, sorry guys. I had to adjust my headset for a second. All right. Okay, if you have any issues with the sound, please let me know. Someone I think just joined us. Jeff Pierce, good morning, sir. We're just getting to the, this is being recorded and we're just getting to the trender section. Okay, so let's see. No, I don't prep for this. I just come in fresh just like you guys do. This is my prep too, so it's very natural. It's not scripted. We're not a media company. Nor do we want to be. New highs, definitely new highs, very strong, and on NDX, it is a bit behind the curve on the detrender, but that's normal when you had a drop like that. That's just the mathematics of it. Don't be alarmed there. More than anything else, we need to watch Russell. As you know, Peter in the chat room watches that like a hawk, and he's an avid trader. We're very blessed to have him with us. He, for those of you who don't know, Peter Cook runs our. He's a moderator, runs a Q chat room. Especially when I step away, he's got the con. I don't know how he does it. very well versed, a lot of his work, and tip his fingers. And so it's just amazing, amazing guy. All right. One more thing, 220. We've talked about this before. I believe somewhere in here we did our last morning brief. My bad. We're going to do at least commitment to do this once a week, maybe twice. We're on a sell program. The sell had kicked in. So long on a weekly, short on a daily. They're very much the same system. It's a trend following. But there's a very small difference between the two, and it's only kept as a binary input, but not the only input in our market timing calls. Okay, we dropped to 3 sigma, and we went to 8. This is the part I missed. Yeah, we went to almost 10. What did we get? Momo hit negative 915 Fari. Yeah. So Sunday night, this was a screaming buy. Yeah, I missed that. My bad. Okay, we had a couple of days this came up, whopping 1 to 2. Should that be alarming? No, because we're so high up. How are you going to get 52 weeks lows when we've had 11, we've had 6 months of a straight up? If you go back on the chart, if you go back from the prior election, I think this is the election. No, hold on. No, that's last year. Hold on. Hold on. I'm going wrong spot. Hold on. If you go here, okay, that was election time, right? There we go. That's election. Okay, you went to a buy on the 5th, the Friday, right after the election. And look, if you look at the levels there, this low there was 32, 33. We're up 1,000 points on S&P. That means it's 10,000 on the Dow. There's no way these numbers are going to pop. What's more important is what this number did. Anything above 140, 160 is the alarm. Here's our 160, right? Here's the 160. So we've had 2 days in a row of alarm, especially 220. Typically, and this was when? This was mid May. Okay, May 10th. Okay. Last time we saw this was 2008, for example. Not last time, I'm saying. Every time we see this in this period, okay, let me parse my words carefully. In April or May, when we see a peak of 140, 160, above that, because normally we're way below. We're in this range normally, around 80, 70, 90, that area. When we go to 220, the topping motion has started. We may have already seen the top, or topping is coming shortly thereafter and then goes down. Now, I'm not saying we're going to drop. I'm not big. We're not going to, maybe 5%, 10%. And even that, I would look for a catalyst. I don't go blindly and say, we have to drop, because one of my indicators said so. No. Plus, it's a preponderance of evidence, not just one indicator. You know my thinking, nothing has changed. But here, I mean, it's a good example. Every time we get these peaks, there's a drop. So this is a warning sign of something is off. Okay, stay tuned. One of the problems we have on the trading side is the volume is still too high. We're at all-time high, and this is today now. The low we hit was 15.1. But look where we have been. We're actually on. Hold on, Jacques. Should be getting a one for today, huh? It doesn't show that. No, that's today. Okay, so big reversal on Monday. Right, I see. Gotcha. We hit 3 sigma and 4 sigma on VIX. This is Friday. This is Monday. And obviously big reversal. Okay, and we usually do when we hit up there is a pullback. This was a little bit sharper than I expected in a relative sense, as a percentage basis, but that's what we're observing. And also the XN has come down. Crude has not. This is the oil. Now there's a calculation issue on that. I'm not too crazy about that because of USO. But look at the Russell. Russell is also dropping, so hopefully this will pull up. Okay. SQ. All right. Now, boys and girls, this is just what the start of Tony and I discussion today. We haven't seen anything like this in a while, Jack. Or shall we say Jacques? Okay, hold on. Let me give you some perspective there, okay? Wow. This is the last all-time high that lasted this long, and again, still was above 150 design limit. There's 150 design limit, and then 100 on the downside. Okay. Obviously, we never hit that low. The low here is 111, say 112. But now we're recording new all-time highs, 165.35. So, issue is, what does it mean, and what do we do worry about? Remember, this is a tail risk of SPX. SPX options, so it's a downside risk. Okay, so if you think of it as a bell curve, okay, you have a bell curve of a price event. Okay, this is a well, let me take a look here quickly on the side. Let me go here. Let me pull this out on this while you're looking at that. I want to go quickly into there's a oh, I don't have it in front of me. Damn you. Okay, hold on. No. Hold on. Yeah. No. Wrong again. Sorry. I'm trying to get to archives because I'm trying to read to you guys. Some of these charts are issue. Right. Hold on. No. I'm not getting to. Damn you. All right. Trying to get to tail risk. That's because of the security issue, right? Yeah, this security issue really messed us up. All right, I'll have to find it. It has to do with yeah, the SQ white paper. All right, that basically explains um, there we go. No, come on. Okay, there we go. Okay, there we go. All right, here's what I'm looking for. This is the SQ white paper. Yeah, here's you some reading material to look at. This is what I'm looking for. All right, there we go. All right, so we'll add that. Yeah. All right, so what this is saying is our design limit was 100 to 100, and no, that's the wrong one. Hold on. This is what I'm looking for. Sorry, this is just as probably. Sorry, I'm looking for this one. Okay, and yeah, let's highlight this quickly. This is important. All right. Okay, so what we're looking for is what our reading is. 150 is not supposed to hit there. So I suspect we will be in close to 20% risk of 2 standard deviation move from here, and maybe around 3.5 to 4% risk on 3 standard deviation move. Okay, this is the log return. So you don't need to know all the math, but you could see if we are going through our standard deviations here. You could see a little calculator there. We are our each standard deviation is about 22 handles there, 23 handles. So 3 of them would be about 70 handles. We had a peak reading where? Okay, peak reading came in about here. Yeah. So and the low we put in was there. So if you take the 70 handle out, yeah, we above that because we dropped more than that there. I realize that, but the chance of the 20%, let's say 18%, something in that range, is that we will be now. That's not where the options are going to be. Folks who are getting these options, they're doing it out of the money because these are expensive options here. Even for the institutional guys, it's SPX. So the bell curve that you see there will create an event that says we have a 20% chance, not a whole lot. That's what maybe 18% chance that we will be dropping out, let's say, below certain supports here before. I'm trying to put my arms around it quantification wise, but I don't want to get into too much math. What I'm trying to say is this is not the event. This is just a preview. Why? Typically, this is about 4 to 6 weeks forward. Now, we did have a value here that was highlighted. There was another one earlier. Let's see. No, that was it. The recent peak was hold on. Hold on. The recent peak was in May, right? There was not, and then we had the one in March. Okay. Well, the March was very soft, and the seasonality is not its way. Here's another thing you need to think about. Every time the first 4 months of the year, okay, first 4 months of the year. So let's shrink this. We have gone up. This is seasonality data, okay? So it's not one event. This is big calendar year starts here. For the first 4 months, so from here through here, which is yes, up, 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 up. And remember, this rapid rise there that gave us the 10,000, 11,000 handle move on the Dow. But these 4 months are both all solid months. So we have to go, for example, to a time frame that says monthly. Okay, you can see that. Okay, so this is June. Look, 1, 2, 3, 4. We've had a massive run. This one dipped down a tad. I understand that, but from the high of here, that's 3760. Okay, this 3760. I don't know if it's. Here's what I don't know. Not sure it's a closing basis. I do not know that. No, I do not. It's not my research. Okay, it's UBS. 1, 2, 3, 4, 5. We've had nothing but actually 6 months. 2, 4, 6, 8 months of higher highs have been hit. 8 months. Okay. When those happen, statistically, based on seasonality data, when 4 of them happen, here's what happened in the next 2 months. The next 2 months are downside. Okay, we're already beginning to see some of the shakes. You saw it in May. Here's in June. Then the next 2 months, July, August are sideways. September is down. October is down further, and then we rally the last 2 months. Now that's the template. It doesn't mean we have to follow it, but that's what the research out there, seasonality says. To me, this is a warning of something is going to happen. We've had this reading in May. That's what I was looking for. I'm saying in May, and now you get this reading. I mean, these levels are never seen before. What if we had the all-time high would not be pushed up? Remember, this is on the history. I think I go back 10 years on this, 7 years on this, whatever, to find this value unplotted. So we're at 161.35. I mean, I know a couple of guys who worked on this. They just, I'm not sure they're still with SIBO or not. They were pretty senior people in the product design section. They're probably freaking out. So here's your trend. Trend is a mixed bag here. Sell and a buy. Not too crazy about the trend anyway. Let's go to TD. We did have the low. The rendezvous is over. We pulled back up. Also, if you go back on U1, you'll see the low that we put in there matched the high there, and we're on the way back down. And we're at negative 340. As always, we're running 2 months, 3 months spread, and that's we're long July, short October. When do we rotate? On the Friday. On the Friday of the month, we rotate. On the Friday before expiration, we rotate. So because when you, as you know, typically VX. I'm rusty. Sorry, guys. I'm rusty. I haven't done this in a while. Totally is right. My apologies. On the Friday of expiration for the equities, the VIX is already rotated the prior Tuesday and settled Wednesday morning. For us, if you look at volume, again, we're volume driven, you know, block trade and all that stuff. You'll see the big boys move out of the VIX positions around Friday prior. So the second week of the month, second week of the Friday, right after the week after not farm, and the week before option expiration is when we roll. So that we have both July and October active. Okay, the weight has shifted, and you see it. You see the term structure by volume. You see that volume trade. Of course, this is live, so it's coming in. All right, that's for today. These numbers will be a lot bigger by 3 o'clock, 4 o'clock this afternoon. All right, let's see. Treasuries. What time is it? I'm getting too slow. I got to do this more often. Big upfront. The front end is spiking. This should be of some concern. This is a monthly support and resistance. So this is MR3. That's pivot, MR1, MR2, MR3, and we're plotting daily so that you could see how it is the best match we've found over the years to work. Now, they are buying the long bond. They have stated they're doing that, and of course, that putting some pressure on it. And also, some of the stuff has come down, some of the data. The lumber, the crude, slightly, but the soybeans, all of those got a little bit of crush there. So that's what we see on the longer end. That's normal. Again, we're at 1 point. That's where we're below 1.5 on the 10-year, which is, if you think of it this way, short-term financing, what do you call it? Cars, houses, pensions. That's what the social financing are these because of the duration that's involved. Okay. There's no question there'll be some optics, but I think the numbers are not going to be as good as they think it's going to be, and so we'll cool down a little bit. Just look at gold. You see it in gold already. Now, Bitcoin is a different animal. I've talked about that. I just think that they can get to so much, and then all the central banks will come in, and they don't want competition. And so they'll come up with the ways of controlling it. One of the simple ones is on the hedging side. It would be margin requirements. And all they have to do is uptick that margin requirement, and poof, the air will come out of it. And we're beginning to see that. If you go to swing, you could do let's see, BTC. Yeah, you should be able to begin to see the problemo, as they say. Yeah, and I'm looking for this 23.5. That's a monthly support. Now, if you go to daily, and you go back to December, there's a gap here. See that gap? Yeah, that's if you bring this line in, we're about to test that. You see where we are? This is the low yesterday. Okay, which was below 30,000. Everybody said 30,000 was key. I agree with that, including my good friend Jeff DeGraff on LinkedIn. If you don't follow him, you should. He's an advisor to Soros, and he runs RedMac, and he wrote our first chapter of the book, my book, Master Traders. Very smart guy. He called for that. He actually called for this level back up here. It was a good call on LinkedIn. Again, follow up. I found this gap recently because once we start penetrating, but we're not going through, I'm asking why. This is why. Okay. Can it hold or not? If it drops, it's going to go test that. I don't think we're going to go up without testing that. It just doesn't make sense. So that level is here. If you look at this high there, 2532. Okay. Yeah, I took a little bit of average there. Yeah. Yeah, the low there. Yeah, I should have. Oh, sorry. Here, my reading is off. I gotta adjust that. 25,300. All right, hold on. Let me make a note. 25,300. Okay, not the low, which was not 24.5. Okay, now Here's the problem. If you go back here, hold on, sorry, come on, okay. This is even below that, 23.5. So, yes, I'm wrong, but first target should be 25,300, and after that, forget the 24. It'll probably try to do 23.5. We'll see. We'll see. Who knows? The issue is what's the catalyst. Let's go to last chart quickly here. All right. No. Dude, no. What happened to our chart that we had? Okay. I have no idea we're going to go there. Well, there we go. Okay. Now, where are we here? We're beginning to see a downtick. The 52 weeks highs. I'm sorry, 50. No, not 52 weeks. It's a percent of its stocks. It doesn't have to. It doesn't have to do with time. It's just percent of its stock above the 200-day moving average is beginning to downtick. It's beginning to get below the moving averages. Again, I go back and I say, watch what's happening within these two lines. That'll give you some clue. Up here is going to be messy. And down here could be messy because of the potential trend change. We don't know what it is, but that's what it looks like. If that's the case, then you're going to get separation to continue, and then we're heading downward. Okay, but and to stay up, we do need to keep on doing these numbers to rise. So it's beginning to show some cracks, not enough. The reminder here is that this is a very, very slow divergence tool. It gives us multiple divergences before it happens. Okay. So good luck. Be careful. Tomorrow is crucial on the econ calendar. Sorry, guys. This on top is behind me. But we're looking at durable goods, GDP is crucial, and then, as usual, jobless claims. Okay. Any questions for me? Hey, Johnny, how are you? Any questions for me, guys? Okay. Let me close. Let me close this recording because we got to get the chat room back up there. We will do maybe in a few days. I'll have a date for you where we do some OTF promos. Bring you folks to come in to see what we've done recently with it. Very different, very improved since last year in overall, but we're not there yet. Give us a few more days, we'll be closer, and we'll send you on Twitter, emails, what have you, or our notices and invite you. Okay. Thank you for attending today, Tony. Thank you for reminding me to do this. This was a great idea. I'm a little bit rusty. I'll get better.